Hey everybody, Blair Nightingale here. Market Monday, let's get this thing going. This is the true Market Monday because it's Monday. And on Monday, we're going to just look at the markets. We try to do this every so often here on Market Monday. We're covering topics, looking at what does it mean to use the technology of 2023, something I've been thinking about a lot this week, just how much the tools available to us have really transformed what we can do. The reason that online trading is exploding so much is because the tools that are available to us are incredible, right? They're just amazing. And what we want to do is explore those tools, right? We want to explore what can be done. And of course, if you've been following along with us the last little while, we have been specifically looking at options, all the different things that you can do with options contracts, originally made as insurance contracts for your stock. The simplest application of options isn't any complex speculative options strategy. The most common, I shouldn't even say the most common, the most plain and simple, straightforward application of options is what they were originally designed for, was as a hedging instrument, as an instrument to use as insurance. That's what they are. When you buy a put option and your stock drops, the put option offsets the loss in the equity, in the stock, right? For short sellers out there, the call option does the same thing, right? Call options make money when the stock goes up. So when a stock goes up and you own a call option, when a stock goes down, when you're a short seller, when a stock goes down, you're going to make money. It's going to go up on the call option, right? So that's insurance, right? And what you can do now is learn about these instruments and buy and sell them instantly because of the technology that we have. And of course, we take that a step further and we do go into the speculation side of buying and selling these instruments in interesting ways so that you and I can have some tools to trade the markets when they're moving up, down, sideways. When we have significant capital, there are specific strategies that actually can make the cash flow potential of our money much, much higher because we have that. There are also flexible options to options, right? I say options give us options when we don't have a lot of money, right? This opens up a world of flexibility and opportunity. That's what we've been covering here on Market Monday. So over the last few weeks, if you haven't been with us, make sure you go back and check out those sessions because you will get the inside scoop on what it is that we think about, what we do with, and how we trade options themselves. That said, we've got some folks coming into the class tonight. Appreciate you guys being on here. We are always grateful to have you. If you ever have any thoughts, questions, concerns, comments that you want to throw into the conversation, you can always do that live here on Market Monday with us here at Tradeway. Just pop them right there into the comment box, Facebook friends, YouTube, and I'd be happy to pull that up on the broadcast and dive into it. It can be relating to anything in the investing world, stocks. We just want to talk about it. So go ahead, pop that in there if you just want to say hi. Of course, I'm always happy with that. Folks who've been around for a while know that one for sure. Also, if you ever have an idea out there of an episode, something you would like to specifically cover inside the Tradeway programs, I always love jumping on a webinar every now and then with our students. And instead of having a topic ahead of time, I just want to open it up. I just open it up, open up the floor, open up the mic, as it were, just to see what does everybody want to talk about? What's the big thing that the students want to talk about? And so here on Market Monday, I'm opening up the floor, as it were, tonight. We can always email support. I usually say this at the very end, but support@tradeway.com. And that's how you can send in your questions. If there's an episode idea that you would like to cover, I'd be happy to look at that as well, because I want to cover things that you guys are wanting to learn about, of course. Now, if you don't want to learn about options, then you haven't watched any of our options series, because trust me, you're going to want to know what options can do. Today, we're going right back down to the ground level and looking at Market Monday looking at the stock market. Let's just go ahead and get in and look at the markets. Since we've last done an update, there are some things in the markets that have changed significantly. I'm going to pull out a few of the pieces of what's happened and some lessons that we can take from them, because I want them to be something that you can begin to utilize when you're looking at opportunities for trades. And these are some really, really important tools. First, we're going to start with just a little bit of an update on what the indexes have been doing specifically. Now, you can see I've got the Dow Jones on here. I don't honestly go and look at the Dow a lot. We've definitely got a channel going on here. So I'm just going to quickly say, you can definitely see industrial stocks here really just in this channel, right? Tries to drop twice, holds twice. We'll see. We'll see what happens on that. But when I say indexes, I'm primarily looking at the movement of the S&P 500 and of the NASDAQ 100 here. Okay, NASDAQ 100 finding a nice bid here, trending beautifully off this slope before coming back down and failing to bounce. Rides underneath, kiss of death, boom, down it goes, right? So there are patterns in the market that are moving up, moving down, moving sideways, advancing, declining, consolidating, right? That's the technical way we would say that. So we're really moving from uptrends to double tops and patterns that are turning momentum into downtrends, into consolidations, and all the things in between, right? So what we have on the S&P was really, we got, if I can go in here and do this. In fact, let me do this first. Let's get a nice big view on this, right? So for a little while, we were actually coming in here and we were moving nicely, right, in this 10-day area. I'm going to have to move this guy down here as well. This has got to come down. That's why. Yeah. Save it, right? So we were trending on this line. Now we heated up for sure and went off that 10-day a couple of times. But in this space here, the market was definitely coming in and getting some really nice trend, right? We're looking for a pattern, something like this. This is what we want, guys. Reliable, predictable, repeatable, right? Something that pulls up. I call this peaks and valleys for our beginners. Peaks and valleys. You want it to go, make a top, pull back, a top, pull back, right? When we're looking for directional trading, right? Speculation, directional trading, it's okay. In fact, it's essential that we are very, very picky. I had a student say to me today, Blair, sometimes it feels like the directional trading strategy is something that would be hard to use at certain times. And I responded to the student and said, that is absolutely correct. In fact, that's an extremely wise thing for a new trader to be recognizing, right? Using these strategies to buy and sell stock, buy and sell options, right, can produce home run results. That is the possibility, the potential of these strategies. But what's really crucial is that we limit that activity to only the best possible times, right? That means as traders that are going directional like this, we're going to be saying no more than we're saying yes in most cases. Certain market environments, there are a lot of yeses. Certain market environments, there are not. We are currently technically in a bear market. The indexes are still in a bear market. We are still experiencing 40-year high inflation. We're experiencing contracting amounts of S&P earnings, beating expectations, still well over half, almost 3/4, but down from last quarter. What does that mean? It means the companies that grew this quarter were less than the amount of companies that grew last quarter, that beat analyst expectations this last earnings season. So that means things are contracting. That creates a lot of volatility, right? Things change quickly. So we really need to hone in and say reliable, predictable, repeatable. I tell people There are 4 seasons in the weather. You don't do the same thing, wear the same thing, see the same thing in every season of the weather. Well, the markets work the same way. When the season changes, we change with it. That is the skill of a well-rounded trader. A lot of people go into a hot bull market, don't know how to trade, make some money, think that they've got it dialed, and give it all back when the market season changes because they don't understand, oh, I'm going to have to do this differently. Right now, in a bear market season, we got to be really picky about what's going on. But we did have some great opportunities over the last few weeks, and I'm going to tell you why. As I mentioned over here, the S&P started to put in a pretty consistent trend. 1, 2, 3 times it hits that trend line, gets a nice move, pulls back to the 10-day, nice move off the 10, little flag here. This was a tricky day because we got a nice follow through, didn't quite make it to the previous high, which is what we would have looked for it to do at this point. Then it goes back, pulls back to the trend line, and gets another 4-day bounce out of it. Now, unfortunately there, it does only hit the recent high and breaks support. What do we do when we're trading a pattern and we look to see an entry and it breaks support? We just don't get in, right? We don't do anything with it. And as the index here broke support, you started to see that these stocks out here that have been nice and consistent, even longer in this case than the S&P 500, it actually broke support, right? It broke through. Now check this out. This is really important. The stock has been making highs, and then here it what? It makes a lower high. There's a high, there's a lower high. It pops up, pulls back. This guy is lower than this guy. So what does that mean? It means the strength is coming out of the pattern. It doesn't guarantee the pattern is going to fail, right? There's no guarantee, but it does suggest that there is some weakness that's come into the stock. And with the indexes also failing at support, that spelled the end of this opportunity. But you can see reliable, predictable, repeatable is the way we like to say it, right? It doesn't mean guaranteed. There is no perfect system, but there are systems that give us a significant amount of information so that when we choose to buy a stock, that gives us a higher probability of that stock moving the way that we anticipate and speculate that it's going to go. And that's half the job. The other half of what a trader does is they do 2-to-1 risk return ratio, which means if I'm going to risk $1, I'm going to do it in order to make 2. If a speculation trader does that with their directional trades and keeps to that money management rule, is what we would call it, they give themselves the opportunity to lose 1 on a trade if it goes against them, but make 2 or more if it goes in their direction, right? This requires some risk management. This requires some skills on getting out of trades, stopping out of trades. And when you have a reliable, predictable, repeatable pattern like this, you have an objective visual. This is why I tell people you don't need a business degree. You don't need an economics degree when you're in the market, right? When you're learning the markets, like a lot of people may think you do, because you're actually looking at buying and selling in the short term. The health of the long-term health of the company is not as important, right? So makes that simplified. But then we actually get to look at something like this. And when we put a floor on it, which is right along that 20-day moving average, a tool that our software gives us, if it breaks through that floor, then we no longer want to be in this trade. There's no reason for us to want to be in it anymore. And so we can exit that trade at that point or choose not to do anything else with it anymore until it forms another pattern because it doesn't do what we want it to do, which is continue to bounce at the floor. I think top of my head here. Yeah, LEN. Here's another great example, right? I could drop this down a tiny bit here. It's coming down many, many times into this line, right at the 20-day moving average. Same thing. Nice bounce, right? Stock moves from about $100 up to about $105. Now, even that $5 move, or let's say $4 move, even let's say $3 move, just to be conservative, with a call option in that particular instance, that can be a fairly nice trade, right? Even at that point. Okay. So there are some management things that we teach our people to do, but we want to understand once I have patterns like this and I start to see them on multiple charts and they're lining up with the indexes, that can provide some pretty good opportunities. Now, in markets like we had back in here, you guys have seen me show this many times. Look at this. Obviously, this is COVID. Within no time flat, it basically recovers all the way. Remember, the government started pumping massive amounts of money into the economy. That made Wall Street very happy. So the markets went right back up, but it continued long after that with very consistent trend. So when you start to look for trends like that in individual stocks and you're seeing it consistently in the indexes, this can set us up for some great opportunities. Obviously, what have we had over the last year and a quarter so far, right? We're coming into March here pretty quick. Well, we've had a downward market that's now trying to get somewhere. I'm going to zoom this out again and go to a 1 year, give us a bigger view, right? Trying to go somewhere, but now just kind of failing and chopping sideways. So what do you do? What do you do when something like this is moving sideways? Well, you have to work with what you have when it comes to technical analysis, which is exactly what we're focusing on today, right? You've got a low, low, and a low, right? It bounced up on Friday, and then you've got these previous highs that started moving down, right? I showed you it bounced up at the 20 and actually failed. So you've got these lowering highs and rising lows. That's how we would describe that. That gives us this little wedge pattern. Almost looks like a little doorstop, right? It's in a little wedge pattern. So you're looking for things, they're squeezed into this point here, and we're looking to see, well, which way is it going to break out? It doesn't necessarily suggest to us one way or the other because the lows are getting higher and the highs are getting lower. I can tell you this, though. This thing falls down into the support area. Little candlestick here holds barely. You can barely see it. Today, we actually had a pretty nice gap and a pretty nice bounce at the open of the day. Unfortunately, it just sold off the rest of the day and is now right back into that support level. So looking fairly bearish at the close, but we would wait to see a breakout of that line, right? And then a confirmation move on that to see where the market's going to go. So for my short-term traders, this is a great spot to look for a real hold, some buyers to step in and push this thing convincingly up into at least or beyond those moving averages. Or we need to see a breakout, a hold, and a confirmation move so we don't grab onto a false breakout on this. Now, this all depends a little bit on the strategy that you're going to use, because we've talked about in the last little while some different option strategies that we can use that give different flexibility. Reminder, we don't only do strategies that require direction. And with options, we can set some strategies up that do require direction, but we don't have to pick a side. There are option strategies where I can actually play both sides of the trade. These are high probability setups that we can learn to do. That happens when we do a deeper dive into these strategies. They can be done, they can be learned, and I'll tell you what, the tools can absolutely help us to learn that as well. So that's what's going on the S&P. I like to come in and also just pay attention to the NASDAQ. You'll notice here, the NASDAQ is definitely sandwiched in between these EMAs. It's just kind of going back and forth, which is what we've seen the market do. And I find that even though the NASDAQ and the S&P are separate, right? S&P has a lot of stocks in it that are not technology stocks. But one thing to understand about the S&P 500 index, that though it has that element of diversification, the weight that is given to each of the sectors is different. And tech is given a fairly heavy weighting, we would call it, in the S&P 500. And that means I like to at least check what's going on in the NASDAQ, which is primarily technology stocks. And I find that even though the movement of the NASDAQ isn't enough to really, it's not more than, tech is not more than 50% of the movement, the weight of the S&P 500, it definitely tends to have a behavior, a relationship between the two, where if the NASDAQ is really sliding, it caps the momentum of the S&P 500. If the NASDAQ is really moving higher, it tends to give a boost. Now I could say that that's not out of opinion, right? That observation is real because there is a heavier weighting of tech in the S&P 500. So I like to look at both. If I see the S&P breaking up through the EMAs, but I know the NASDAQ is going to bump into the 10 and the 20 here, which it's now done twice. Today, the S&P gets up into the what? The 50-day moving average, tries to break through it. But when I go back over here to the NASDAQ, I can see that it's hitting the 10 and the 20-day and never even comes close to breaking that. So these kinds of things just give me a little bit of a heads up when I'm looking, especially if I'm looking to trade tech stocks. I'm going to look at that, and I'm going to look at the correlation between the two. And what I really want is what I have over here. If I'm buying stocks, what I'm really looking for is give me some nice clean trend where the stock is above the EMAs. Okay. What we're starting to see here now is going to go the opposite direction, right? Once I start getting lower highs, I had something like, I got to adjust this part of it here, right? Something like this in here, because the lows, right, or the highs rather, are getting lower. And now, even if this breaks out of here, I'm going to see if that holds where it is. But first, we're stuck in this little sideways action here. So all that to say, what am I telling the students right now? Well, one of the things we've been talking about is, again, it depends on the strategy. But if we're looking at just buying stocks in here, this is just not a great spot. Not a great spot for a short-term trade. We're not talking day trading here, okay? But a short-term swing trade in many stocks, they are going to get stuck in there. That said, one of the things we can do is come in and look at stocks that are greatly outperforming the indexes. When you find stocks that just don't tend to have a lot of correlation with the indexes and they're just ripping higher, bottom left of the chart to top right of the chart, that's a great starting spot. I'm going to take those. I'm going to put them in a go list and just keep my eyes on those for the shorter term trades, because I have to be more picky about that. I have to find something that has less correlation if I'm just not seeing the kind of activity that I want to see in the markets, right? Because we're trying to sync these up. Some of the big stocks out there right now, same thing. Apple getting a nice run up here and then boom, breaking the floor. Tesla doubling in a month, right? Let's look back here, about $102 on January 5th. Let's go to February 5th right here, closing at 194. So not quite doubling in a single month, but pretty darn close, going up to a high about 210. And now not really giving up the ghost here, just channeling sideways, right? So consolidating in here, looking for a breakout of that, but holding up pretty nicely in here after a pretty strong run up, right? Amazon here, here's what I want to show you on Amazon. Let's take a look at this for a second here. The highs on Amazon, we're looking at November 22 of 2022. I'm sorry, 2021. 2021, okay? November, end of the year, before we started moving down in 22, right? We moved down all year in 22. That's $190, we'll call it. It's just shy of that, but $190, hitting a low of $82, right? That's more than 50%, guys. More than 50% on a company like Amazon. So we're getting into this point where these stocks are getting deeply discounted, and yet the fundamentals, now for my longer term investors, the fundamentals of the economy, finding that investors are still getting pretty spooked about, again, company earnings contracting and inflation now two reports. They released the December report, said that inflation came down. They revised it in January. Blair, can they do that? Yes, they can do that. And they did that. They revised it in January and said, oh, actually it went up. So what we thought was going down actually went up. And then the last report we got on inflation after that also said that it increased. So inflation actually not going down at the rate that they thought it would be, not going down really at all, right? At least not in these last few months, despite the fact that they're aggressively raising interest rates. Wall Street doesn't like rising interest rates, right? They do want the Fed to get inflation under control. So they like that, but they don't love the idea of having to drive the economy into a potential deeper recession because they're raising the cost of money, right? When you raise the cost of money, things get suppressed in the economy. When money's cheap and it can flow freely, it lifts the economy. You saw that in what I showed you post-COVID right there. So if they continue to see the Fed raise rates, which they were expecting them to stop in the middle of the year, guess what? If we don't see inflation come down, they're not going to stop in the middle of the year. And we could see what we call a hard landing, where the Fed actually raises rates high enough and it tips the economy into a full-on recession. Quick thought, the thing to watch there for those who are keen on these sort of economic trends is to watch employment, right? When we really start to see layoffs and employment shifting significantly, that's when the cycle of the market that we're in starts to slip into panic. And that's when we can tend to see much heavier selling, which is why for us, we are just not convinced that this is a great time. Now, this is a broad statement, but overall, not a great time to say, you know what, I think the market's going to start to really recover here. I'm really seeing the kinds of things from the Fed and from inflation that we need to see to be really confident of where this thing is going. Okay. Let me make sure. Just want to make sure I don't have any questions out there. I don't. I'm going to move to S&P. So we've started to see some recovery. I mean, look at that. 3,500, right? Up to over 4,000. So that's a pretty nice recovery here. But you can still see some major headwinds out there. And of course, on Amazon, just one company, one stock, one sector, but definitely something to show. And you'll notice, unlike the markets that finally broke their 2022 downtrends, you can see just not long ago. Let's see, I just got a prompt. Okay, not long ago here on February 1st, Amazon once again hits the 200-day moving average, bounce off that long-term trend. Oh, I zoomed in a little too far here. All right, let me go to the weekly chart. It'll show a little bit clearer. You can see high, 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 drops right off that, potentially even maybe heading back down towards those lows, right? So very interesting. Something to keep in mind that as the markets go down, especially if we begin to see a greater level of fear, right? Fear in the markets, that's when other investors who understand what's happening are getting ready to buy. I'm not saying they're rushing out to buy, but they are getting ready. While the world is getting out, investors are getting ready, and traders have skills if the markets begin to fall significantly. Skills to hedge their investments, as I started with today, but also to look at profitable situations as the market is moving downwards. Okay, so that's something we want to look at, and I want you to understand how to do that. If you've never taken one of our courses, I say this all the time, tradeway.com, head on over. You can take our live event, Step 1, Start Your Journey. That will bring you into the information you need and the application you need for the transformation that you want to have. If you're spending this amount of time with us, Monday, Tuesday, Wednesday, Thursday, we're right here on Go Tradeway TV. You are getting a ton of information. Let's get you some application. Again, right there on tradeway.com. You can sign up for our Step 1 live event. We'd be happy to show you everything that we do as a foundation of our stock trading system. I've given you a nice preview here tonight. Guys, appreciate you always being on here. As always, Blair Nightingale here, Market Monday. This is a nice update. If you know somebody out there who likes watching the markets, market news, things like that, go ahead, send this link on over to them. Give them some current actionable information in terms of understanding how we can take some actions to protect our money in the stock market. And I think they'll appreciate that. I would appreciate that. Send that on over to them. Thank you guys once again for being on here, and we will see you next time. Good night.